Hey folks, Dan Frio here, the Mortgage Update, and today is February 12th. Let's get at it. It's going to be short and sweet tonight. I kept you guys online for about almost 20 minutes last night, so apologize about that. And I just got home. It's late here, and I just want to get something to eat. So, thank y'all we're really busy. I had calls today. Actually, I had a great call from a young man in California, and he was looking to refinance. And he said, Dan, my rate is 4.75. What can you do for me? I said, great. Let me look into some numbers. But if you would, please give me some of your information, but send me a copy of your mortgage statement. Let's make sure your numbers are accurate. And, let's figure out what we can do for you. So I worked it up, and I got back to him. He said he was at 4.75. I said, I ran all the numbers today the way everything sits. You can get 3.5. He's like, he got all excited. Awesome. Here, I'd love for you to help me out. So he sent me his mortgage statement. Going through the mortgage statement, I saw that his rate was 3.25. Where he got it, God bless him. He did get it. I don't know if I didn't go through the numbers in detail, but I don't know if he paid points or whatever. And thanks, Paul, for reaching out. Won't say your last name. But I'm looking through his mortgage statement, and he's at 3.25. And I'm like, dude, stay with what you have. Don't refinance. Don't let anybody talk you into refinancing. Because he called me. And he said, Dan, I watch your YouTube videos, and he said, I keep getting all these flyers saying refinance, refinance, refinance. So thanks for calling. But like I said, I always say, check. I'll be completely honest with you. I'm not going to bamboozle you. What I don't want you to do is give me a bad review, and then it stops all of this. I worked way too hard to get to this point. I've been doing this for 32 years. I'll give you a little bit of my feedback for those new to the channel. I'm a mortgage advisor, have been doing it for 32 years. I'm in Chicago. I do most of the country, and hopefully within the next about 6 months, we'll be all throughout the whole country. Basically, I'll tell you the truth. I'll tell you the good, the bad, the ugly, whatever I'm not going to tell you what you want to hear. I'll guide you in the right direction, let you know if it's a good or bad decision, and I'll give you my 2 cents. You're the boss. You don't have to do what I say, but I'm going to give you the honest opinion. So I said, Paul, keep with what you got. Don't let anybody talk you into refinancing. Even if we could get a rate of quarter, maybe a 0.5% lower, it probably isn't going to be worth doing it. And I'll give you my 2 cents. Again, I'll be honest with you. So that's what I do here. And I'm going to go through some other stuff on how I can help you and how to reach me at the end of this thing. So what happened today? If you follow me yesterday, I said, the stock market's probably going to be flat to down. Why I made that decision? Well, the stock market opened yesterday up 120, ended the day at 0. So the trend was down. Okay, so I'm thinking there's really not that much economic news coming out. Chairman Powell, he's the Federal Reserve Chairman. He's going to come out and say some stuff, and there's not going to be any surprises there. And so I figured everything would be flat. But we got news that the coronavirus is starting to deteriorate. Spurred the market up. Everybody jumped back into stocks. I just logged in. Look what this just came out. China reported 14,000 new corona cases. And it just popped up. So I don't know what tomorrow's going to bring. So I hate to say it, but it's going to be one of these again. So let's get on to this. If you haven't refinanced, and again, Paul, thanks for reaching out. If you haven't refinanced, you got to at least check. Refinances are up 200%. 200% since last year at this time. Think about it. And why? Well, the coronavirus and some other things have really spooked the stock markets, drove money into the bond markets, thus dropping interest rates, and gave everybody a huge opportunity to save. So that's what's going on there. And you can see it right here. Mini mortgage boom because of the coronavirus. Let's get on to what happened in the market today. The Dow was up 274. Basically, that's the data. So keep an eye on the coronavirus. A couple months ago, it was the China trade agreements. A couple months before that, it was Iran and Iraq and the Middle East situation. There's always going to be a dilemma somewhere. So tomorrow's economic news coming out. It's down here, the consumer price index is coming out, and initial jobless claims. I don't think we're going to get a surprise in the jobless claims, but I could be surprised. But what we keep a big eye on is the consumer price index. That is a gauge of what's happening with inflation. So as long as inflation's intact and not running rampant, the Federal Reserve is going to just kind of sit on the sidelines. And if the coronavirus even does some more damage, They might even come in and drop rates. I don't see that happening. So if you're sitting on the fence saying, I'm going to wait for rates to drop, I don't know if I'd go that route. And I don't really think rates are going to go. I mean, they might teeter 0.1, 0.2, 0.3%, maybe lower. I don't see it. But the upward trend is much worse of an avenue. Here's what I always tell my clients. When you see gas prices move, you usually, when they come down, they'll come down penny by penny by penny. But when they go up by 50 or 5 cents, 10 cents, 25 cents, 50 cents. They don't really just trickle up. They jump up or trickle down. That's the same thing we see in the mortgage rates. So let's see what the trend is right now. Like I said, I'm going to make this one kind of short and sweet. I'm tired and don't mean to dwell on that. But let's get what happened to the market today. We had a downtick. For those that are new to the channel, we watched this number right here. This is the mortgage-backed securities market. This is a bond that trades that actually creates or establishes mortgage rates. Okay? So this is the price of that bond. As the price goes down, I'm paying less for the bond, less for the investment. My yield or my rate goes up. I get a higher rate of return. Conversely, that's a higher mortgage interest rate. That's what it's tied to. So we love when this number goes up, because as the prices go up, yields or rates come down. That's what we want to see. The trend right now lately has been not too good, but look at this run that we saw. I mean, this is absurd. It was through here. This is the trend line, and I kept saying, I don't see that continuing, because this is a kind of a cap that we watch. It's called the Fibonacci levels. I'll just say this is a cap and this is a bottom. It basically gives us some bumper lines to fall into, and this is a bottom here. So you can see this grid line is huge. So we're going to tighten it up and we're going to follow in here. So look at this. Look where we're kind of at right here. Ah, crap. Hold on a second. Look at this. You're going to see something here that kind of, look at these. We hit it there, we hit it there, we hit it there, we hit it there, we hit it there. This is good news, because what I see happening here is we kind of teeter down, we hit this. I think this is going to be our new bottom, and we're going to go upward from here. So if anything, I'm predicting we're going to be in this range. It's a badward trend that we're down now, but again, if you follow my channel, pigs get fat, hogs get slaughtered. Usually the trends don't go this long in a duration. We were getting piggy fat, piggy fat, piggy fat, and then we started getting to be hogs. And I said in here, I basically saw this as kind of a short-term top. Same thing through here. I think this is going to be our short-term bottom, unless some of the numbers this week come out that are just kind of, they kind of throw us by a curveball to us. And again, this coronavirus news, there's always something that the media tries to stir up. And if they spook the markets, meaning they spook the stock market, you're going to see people jump into bonds, thus bringing up the price, down the yields. But if there's all good news in the market, it's pulling money out of the bond markets, creating the price to go down, the yields go up, and I'm going to confuse you or whatever. But watch me every day. Don't forget to subscribe down below. Click the bell. I will keep you up to date on what's going on with rates. If you're a realtor out there, reach out to me. I'm trying to expand into areas such as Florida, Texas, Arizona, California, Colorado. If you're a loan officer there and want to talk, love to talk. My information is down below, my email address and my phone number. Love to talk to you. I'm trying to get around the country this spring, this summer, to go out there and meet with the realtors. So if you're in an area, anywhere in the country, but especially in those areas that I just mentioned, please reach out to me. I'd love to stop by, see how we can work together, and I can help you with a lot of this stuff, social media. I'm on the radio in Chicago. So let me just give you a brief description about me. My name is Dan Frio. I do the mortgage update every day on YouTube, and I do it on radio as well in Chicago. You can hear me on WYLL Radio. It's a Christian radio station in Chicago. I'm on there every weekday, Monday through Friday from 7:30 to 8 p.m. I am also on WIND Radio Saturday mornings from 7 to 8. I have commercials running on there. You're checking out my YouTube channel. Please subscribe. Check out all the videos I got. I think I'm coming on close to 500 videos. Love to help you there. But if you'd like to reach out to me and just say, Dan, I'm looking to buy a house. Can you help guide me in the direction? What's the best programs you have? I'll walk you through all the programs that we have and the best program that I think you fit for. But I'll usually give you 2 or 3 options, saying you go here, here, and here, A, B, and C. I'd pick B. Here's why. You don't have to pick that, but I'll give you my reasoning behind it. And again, I'm not looking to steer you in the wrong direction. So if you'd like to, even if you're looking to refinance, like Paul did, reach out to me. Send me a copy of your mortgage statement. Email it to me down below. There's no pertinent information on there that I can use. There's no social security number, birth date, anything of that sort, so I can't use that data to kind of steal. But I can at least get back with you and say, you know what, what's your term remaining? What's this? What's your goals? And let's see if it works. It might work, it might not. The worst case scenario, you've got the best loan that's available to you at this time. So that's the worst case scenario you have. So if I can help you, please reach out. You can call me at 844-775-LOAN. Loan is 5626. I have a new email address, so don't use my old one. I can't get those anymore. I deleted the account. Call me dumb. I deleted the account. I can't get access to them anymore. So it's Danny, DANNY, .Frio, which is FRIO, at preferredrate.com, or look me up at thefrioteam.com, or reach me at 844-775-LOAN. That's 844-775-5626. Thanks again for watching. I greatly appreciate you guys. Don't forget, please give me a thumbs up. Subscribe down below. Leave some comments. I reply to every comment out there. If you have scenarios, anything like that, you want to apply now, got a brand new link down below. And I'm going to be expanding on that in the next couple weeks, and I'll be explaining more and more and more that we have in technology-wise. So take care. Have a great night. See you tomorrow.